can you establish and rebuild your credit fast? This video has been requested by some of my subscribers, so here you go. If you're new to my channel, hello, this is Sally, and in this channel, I share my own experiences in finance and living in Canada and beyond. Building a good credit needs patience and right strategy. We're going to talk about credit building, what's a good credit score, how are they calculated, steps to establish and rebuild your credit, and how long is it going to take. If you are new to Canada, you need to know these things to set you up for success, especially if later on, which is very likely, that you will need to buy your home, your car, get loans, etc. And if you currently have poor credit score and looking for ways to rebuild your credit fast, you have to listen and take notes. For those of you who doesn't know what credit score is like a grade for how well you handle money. It's a number that shows how good you are in borrowing money. If you pay your bills on time and manage your debts wisely, your score goes up. But if you miss payment or have a lot of debt, it goes down. Lenders use this score to decide if they will lend you money and what interest rate to give you. So, a higher credit score is like A+ for your financial reputation. Credit score is from 300 to 900. Now, how can we say if a credit score is good or bad? Poor, fair, good, very good, and excellent credit score. Poor credit score is 300 to 559. Fair credit score is 560 to 659. Good credit score is 660 to 724. Very good credit score is 725 to 759. And excellent credit score is 760 and above. Having a good credit score has benefits like higher possibility of loan approval, getting lower interest rate, getting higher credit limit, and getting a better car insurance. How are credit scores calculated? Your credit scores are based on the information included in your credit reports. Now, what are these informations? Number one is payment history. This accounts 35% of your credit score. Are you paying on time, or you're always late or having missed payments? Number two, credit utilization ratio, or your balance owed. This accounts 30% of your credit score. How much of your total credit are you using? How much balance do you have? I will tell you later how much is a good utilization ratio. Number three, hard inquiries. This accounts 10% of your total credit score. How often are you applying for loans or credit cards? Hard inquiries will be put into your credit file every time you apply for them, and this will usually impact your credit score. Later, I will share with you what you can do to limit these hard inquiries. Number four, length of credit history. This accounts 15% of your total credit score. How long have you got your credit cards or loans? The longer, the better. Number five, credit mix. This accounts to 10% of your total credit score. Do you have a mix of credit, or you only have credit cards? The more the mix, the better. Knowing these informations, we now have a clear idea on the steps we have to take to increase your credit score. Now let's talk about the steps to quickly establish and rebuild your credit. Number one is to pay your credit cards on time. All the time. Now, this is very crucial since most of the credit card companies report to credit bureaus every month. Payment history is the most important factor in ranking your score. Remember, it is 35% of your total credit score. So, if you are paying on time, that's a plus points on your credit score. On the other hand, if you miss your payments or you're always late, there's a negative point on your credit score. The later the payment is, the more damage you can expect to your credit score. The only way to revive your score is to start making payments before they are due. Now, if you easily forget things like paying your bills, you can automate it so you will never miss. Number two, keep your balance low. Credit reporting agencies don't like a high credit balance. When you max out your credit, it hurts your credit score. Make sure to only use 25 to 30% of your credit card limit. That is the utilization ratio. For example, if your credit limit is $1,000, make sure to only use below $300. I will give you some tips on how to keep your utilization ratio low. Number 1 is to increase your credit limit. The higher your limit, the lower your utilization ratio. For example, if you double your limit, you cut your utilization in half for the same spending. Number 2, pay down your balance more often. Credit card issuers report your balance to the bureaus once a month. So, if you can make a payment twice or 3 times before its due date, you will have a lower balance before they report it. Number 3, keep your old credit alive. The length of your credit history impacts your credit score. Do not cancel old credit cards in good standing, even if you don't use them regularly. Keep these cards and use them every now and then to show some activity on your credit profile. Number 4 is to have a credit mix. It helps if you have different credit accounts. For example, credit cards, lines of credit, mortgages, car loan, student loan, and personal loan. Your ability to manage all these different credits will signal credit bureaus that you are a good borrower. Number 5, review your credit reports for any errors. It is important to review your credit reports for incorrect information that is hurting your credit score. If you found a mistake, like for example, an account, missed payments, or bankruptcy that's not yours, you can file a dispute. If the error was very harmful, you may see a large jump in your scores once the dispute is resolved. Number 6, plan your credit shopping. Every time you apply for a credit card or a loan, a hard inquiry is placed on your credit file as part of the application process. And this hard inquiry will lower your credit score. What if you want to get a car loan and you need to shop around where is the best interest rate? What you can do is to do the shopping within 2 weeks. Credit reporting agencies will consider all these hard inquiries within this 2-week period as one hit instead of several hard inquiries. Number 7, consolidate your debt. If you have a big credit balance and you are having a hard time paying it, a low interest balance transfer credit card can save you thousands of dollars in interest payments. To make the most of this strategy, you should plan to pay all or a significant portion of your debt during the low interest period, which is usually 6 months. If you qualify for a personal loan at a lower rate than your credit card, you can use this to pay off your credit card balance and save money. Next, get a secured credit card. If your credit score is poor or you do not have any credit history yet, for example, new immigrants or student, it may be difficult to qualify for a regular credit card. You need to get a secured credit card. A secured credit card requires you to put down a deposit with the bank before you can use it. The amount is between $75 to $300, depending on the company. Now, let's talk about how fast can you improve your credit score. The length of time it will take to improve your credit scores depends on your unique financial situation. At the earliest, you may see a change between 30 and 45 days after you have taken steps to positively impact your credit reports. And if you are waiting for negative information to fall off your credit reports, it may take up to a year or more to see a major change. I would appreciate if you like and comment, subscribe and ring the notification bell if you haven't yet so I can still see you on my next videos. Let me know if you have any video suggestions or anything you want me to talk about in the comment section. And if you want to learn the 5 things I learned about money when I moved to Canada and that nobody is talking about, make sure to watch this next.